The Nasdaq 100 began the week on the back foot after reports emerged that First Citizens Bank agreed to buy large parts of Silicon Valley Bank, which included buying $72 billion of assets at a discount of $16.5 billion. You can see the reaction to First Citizens Bank share price. The deal was supported by the Federal Deposit Insurance Corporation. The regional banks surged on the news on Monday, but look at what happened to the Nasdaq 100. Whilst the regional bank index came off its high and remained sideways, tech stocks underperformed. Now the thought process behind this is that if the banking sector stabilizes, the Fed is likely to push ahead with an additional rate hike in May, with a 25 basis point rate hike likely before the Fed holds rates steady for some time. This is why you see a divergence here between the regional banks and the Nasdaq 100. The Nasdaq 100 outperformed last week, whilst regional banks were being hit. You're seeing that trade beginning to unwind. Tech has become a bit of a defensive play, especially the FANG stocks. This was the US FANG stock performance last week compared to the S&P 500. You can clearly see the outperformance. Whilst Monday saw 12,655 support level hold, a level which we mentioned in the last video, Tuesday saw price breach this level on an intraday basis, hitting the 20-day moving average around 12,500 in the process before rebounding. Price closed Tuesday right on this support level. Since then, price has been tracking higher, breaking above the key resistance level of 12,940 on Thursday. On Thursday, Michael Burry, famed for the big short during the financial crisis, admitted on Twitter that he was wrong to suggest selling earlier in the year. Buy the dip this year, as shown by this chart, has worked well so far in 2023. Although we are only just finishing Q1, the S&P 500 has bounced by 0.3% on average following a down day. The actions from the Fed increasing its balance sheet over the last couple of weeks to stabilize markets following weakness in the regional banking sector has helped, and you can see that in this chart. When the Fed rapidly expanded its balance sheet during the pandemic, the Nasdaq 100 tracked higher. The Nasdaq 100 is on track to finish another week higher, and it's no coincidence that the Fed balance sheet expanding has provided liquidity in the markets and helped stocks. Today we had the Eurozone inflation numbers, which cooled significantly to 6.9% year on year from 8.5% in Feb, and it also came in below estimates of 7.1%. Whilst in the US, the PCE price index, which is the Fed's preferred measure for inflation, came in at 0.3% for the month, below estimates of 0.4%. This has helped the Nasdaq 100. You can see the low today, price has retested 12,940 as support and is holding so far. If price heads into the weekend above this key resistance level, that could see stocks squeeze higher next week. In terms of levels to watch into the close in next week, whilst 12,940 is the level to watch into the close on the downside, the upside level to watch is this near-term trend line around 13,100. Get above that and we look onwards and upwards, with 13,320 and 13,540 as the next upside targets. If price were to close below 12,940, downside level to watch would be 12,655, which is where price closed on Tuesday. Next week we have the monthly jobs report, which will be the focus for traders. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content, and I'll see you at the next one.